trajectory completely. But let's welcome Siddhartha Khemka, the head of retail research at Motilal Oswal Financial Services, on the show now. Siddhartha, Tata Motors is a stock that you like very much. Goldman believes the valuations are attractive, the numbers are very encouraging, their debt reduction trajectory appears to be on track, or perhaps they might even exceed that and better it. Thoughts on Tata Motors after the up move that we've seen today? Can retail investors still go ahead and buy?
Yeah, very good morning, Reema. I think the updates from Tata Motors have been very encouraging. If you look at the overall auto pack, what we have seen is that after a very long time, things have changed in favor of the entire auto space. We did a report sometime back where we said that the overall auto pack is coming back from the brink. Last 4 or 5 years, there was apart from the supply chain issues, there were other issues such as higher cost of ownership, lower affordability, the chip shortage, and things are now becoming much better with the companies being able to pass on the cost inflation at the customer level, the realization of the pent-up demand, and improvement in the overall supply chain issues. If you look at specifically the Tata Motors, I think the update from the company is very encouraging. Not only the business update about the growth that the company is able to do in India and the strong growth in the JLR business. What is encouraging is that the company has indicated that the free cash flow generation for JLR will be much higher than what they had initially earlier indicated. So I think that is something positive. The FCF of 800 million in Q4 is much higher than what they were earlier expecting, about less than 500, which would lead to the company becoming net debt negative. So the net debt will become zero in FY24, and that is a big positive. So overall, if you look at Tata Motors, I think the three business segments are showing strong growth. The Indian CV business is likely to see a recovery with the capex and industrial cycle. The Indian passenger vehicle is on a strong footing, mainly led by the newer models and the EV segment. And while JLR is now also seeing a strong recovery. So all the three cylinders are firing. I think there is a good upside potential. Nonetheless, today the stock has moved up. So investors could wait for a day or two, but I think we see a good upside from current levels as well. Currently, we have a target of 525 on Tata Motors, with 50% of the value coming in from the domestic business.
All right, you're sounding very optimistic on this one, Siddharth. Thanks a lot for joining us. You know, another stock that you are sounding positive on is Vedant Fashion. Take us through what your call on this is. Why are you so positive on this stock, and what is the kind of upside you see here? Because it has seen a near 20% cut in this year itself, right?
Yeah. So, Pavitra, if you look at the entire retail space, I think the companies did well post the reopening after the lockdown, and we saw huge pent-up demand. Valuations went up the roof, and now with the last quarters, the consumption demand kind of slowing down, we saw the stocks as well as the valuation coming to comfortable level. This is where we started liking Vedant Fashion, which is present in the niche segment, which is the ethnic wear segment, which is highly underpenetrated and unorganized in India, with just 20% of the entire market being branded so far. So we feel that Vedant has a very strong brand in this niche segment. It has a decent growth story, and as we have seen that the in India, the marriage related, so for example, the jewelry segment for Titan keeps growing year after year. So Vedant also caters to a large segment, which is the demand comes from the marriage season, and that is something that could keep the demand strong in an otherwise somber consumption environment. So that gives us much confidence on the growth going forward. So we are expecting about 20-21% of revenue PAT CAGR over the next 2 years, of which 15% will be driven by the new stores addition. Overall, limited competition, growing strong cultural pull, and a very strong brand makes us positive on Vedant. The correction also offers a decent entry opportunity. We have a target price of 1400 from a 1 year perspective.
1400 is the target price on Vedant Fashion, the owner of Manyavar. You like ICICI Bank as well. Is it just ICICI Bank in the private sector financial space, or is it your top pick in the private sector financial space, or you like the entire basket and you only want to talk about ICICI Bank today?
So, Reema, if you look at the earnings, I think the quarterly earnings have clearly been driven by financials, although the pace of growth is now, you can say, consolidating and is now coming close to growth is consolidating. But I think two sectors which are clearly driving earnings growth would be your financials and auto. So I think the private financial space would continue to do well. Within that, our preferred picks have been the ICICI, SBI and Axis, but ICICI having underperformed for quite some time now. I think with the other banking companies coming out with strong business updates, we believe that again, after underperforming, ICICI is a good entry opportunity at current levels. The overall business remains quite strong for ICICI. It has been able to increase its PCR to 83% as of Q3, which is among the highest in the industry. It has been well cushioned with higher provisions and on its balance sheet. We expect normalizations of the credit cost from FY23, so that is also positive. The margins are expected to remain strong with growth in SME and high-yielding retail segments. We expect 18% loan CAGR for ICICI over the next 2 years with strong return ratios, ROAs of 2.2% and 17% ROEs. So I think a good entry opportunity again in a private sector bank with a decent growth.
All right, Siddharth, very helpful to talk about all of these individual picks, ICICI Bank, Vedant Fashions, as well as Tata Motors. We leave it at that, but we hope to have you back again soon and discuss lots more ideas. For now,